Good evening, traders. Mark here from the day trading room. It's 10:30 on a Sunday evening, and I'm going to do a slightly different video tonight. I'm going to answer some of the questions I've been getting on the email and on the day trading room forum and the private messaging facility there from some of you traders regarding my YouTube videos. So I'm going to answer these publicly rather than answering them individually because I think it should help any other traders who've got similar questions. So let's get cracking. First question from John. I notice you talk about volume a lot. How do you incorporate it into your strategy? Well, yeah, volume's very plays a key part for me. I like to read the volume in conjunction with the price. Obviously, the price is the number one thing that we look at, but volume to me confirms the strength of a move and also signifies the interest in the move. Now, I use volumes in several ways. The first is perhaps to judge whether or not the trade I'm looking at is worth looking at. So in other words, it's an initial filter. If volume's low and we're in a low volume period, and perhaps during lunchtime, or perhaps a whole day, if it's after a holiday, then I'll use that as a key that it's only retail traders generally who are involved. There's not big money about, so I'm not going to be involved. For me, the more volume, the better. The bigger volume days, days where everyone's interested, means that the setups and strategies work a lot better because more people are involved and because it's less likely that one or two sellers or buyers are going to come in and move the market. When I look specifically at volume, though, and I'm thinking about a trade, if I'm, for example, fading a support and resistance level, perhaps the market's moved down to a support level. If I see a bounce off that level with good volume, then I'll deduce then that the buyers are quite aggressive at that level, perceive it as value, and it'll help me believe that the trade has got some mileage in it. Similarly, if I'm looking for a flush through a support level to bounce back up, if I see in a candle with a tail on it, um, I'd like then to see volume. If I see a candle with a tail, so we've got a candle, we've got a big tail on it. I want to see really big spike in volume. So if that's the volume bars there, let's say this is the candle. Let's say we've been moving down slowly. We get this candle, we get this tail here. This volume spike indicates to me that there's a flush out. It stops being triggered. It's the longs who can't take anymore. If you flip it on the other side, it's the shorts who can't take anymore, and they're just clearing out, and that they've had enough of it. And that's the sort of thing I look for in that situation. Um, so yeah, that's hopefully that's answered the question, John. It's just a case of integrating volume with how you perceive price. Do I trade anything else other than the YM? Why don't you trade the ES instead? Says FOMA. I trade the YM majority of the time. I do trade crude oil as well. I haven't traded it recently, purely because it's the summer, and I'm just going to concentrate on the one market and look for a few setups to keep me ticking over. But yeah, crude oil definitely I like to keep an eye on, and obviously the YM is my market I trade the most. Why don't I trade the ES? Well, you can trade either or. You can trade the YM or you can trade the ES. They move very similarly. The only reason I trade the YM is because I do look at the DOW cash a lot, so I do use that to judge my entries and exits, and the YM obviously is the DOW cash. And the only reason that I've used the DOW cash is that it's what I'd have looked for the past 9 years, and when I started trading on the London Stock Exchange, I use the DOW as a sort of proxy for my trades there. So it's just been a natural progression, really. But yeah, I mean, I will trade the ES generally. Use it, put limits in, but I prefer to use market orders because I'm a very sort of a tape reader. I like to read. So if I'm taking the market on the YM, it's costing me a tick and a tick on the YM is worth far less than a tick on the ES. So personal preference. I mean, that's about it really. There's no other reason for that. And just going back to the original question, do I trade anything else? YM and crude oil, and occasionally I will trade a US stock if it's news driven. I haven't done for a while, but if it's news driven and it tends to behave more like an index, then I will tune into it and trade it and treat it as if it is an index. Next question, what indicators do you use? This is from PJ. Well, PJ, I use with volume, I suppose. You can't really call it an indicator. I use the VWAP. I like to use the volume weighted average price as a good indication to see how far the price moves away from it, and also when it's pushing back to it on a trend day. I occasionally use a 20 period moving average on a trend day to help judge my pullback entries. Other than that, I take it off. Um, very occasionally, you can use a stochastic on a 5 minute chart, just a slower moving stochastic to try and judge your entry on a longer term pullback. But other than that, I think indicators really, you've got to pick an indicator to suit you rather than putting indicators on and then trying to find a strategy to fit those. You're better off finding a strategy and then using an indicator to help you with that strategy. Perhaps I'll do another a video on that at some point. That's an interesting topic. A few people have asked that. Next question from Ron. What broker do you use? Well, Ron, if I'm trading the futures, I will use TradeStation, and predominantly that's just because I need to do you need 10 round turns a month to get your free charting. But as I'm from the UK, I can benefit from spread betting, which I use IG Index. Now, spread betting is not available to Americans; it's only available to Europeans and Brits. It's basically identical. It's identical to trading the futures. I mean, the logistics of it is slightly different. You're actually making a bet, which gives it tax-free status, so it's fantastic from that point of view. And you trade the actual cash price that's adjusted. It's based on the futures, but it's adjusted for the cash, and you pay no commission, but you pay a spread instead. If anyone wants to find out more about that, come onto the forum, the daytradingroom.com, and you can click on the IG index link from there and have a look around that. But as I say, it's not open to any American traders. Watch your video where you talked about how you dislike trend days. Why is this? Shouldn't that be the day you make most of your money, Super Trader? Super Trader, I don't like trend days because I tend to prefer the market moves from level to level and rotates back and forth, because I can be flexible then. I can fade support and resistance. I don't mind a trend day, but generally I've only got a couple of setups that work on trends. I'm looking for the first pullback on the initial burst, and then I'm looking for a larger pullback, and then later on in the day, a completely different cycle. So I don't mind that on that sort of trend day, but the trend days I don't like are the ones that grind up and up and up. They hardly pull back at all, and I'm not in the habit of chasing markets. I won't chase something, so I tend to end up having little or no trades on that day. That's why probably in the video I've said I don't like grindy trend days. Okay, Cable Guy says scaling. You scale out, but do you scaling and at what levels? Yeah, I scale out and I do scale in as well. But when I scale in, I probably only scale in occasionally, and that's and once. What I'll do is I'll have it planned before I make the trade. I wait for the trade to come to the level I'm interested in, and then if I think it needs a bit of room, I'll split my planned trade size up into two. Take half at the initial level, allow the market to move against me, and then scale in again, but with obviously with a stop around that. I also may scale in if the market goes for me. So let's say I'm going to take a flush of exhaustion. I'll take a scale, and then perhaps I'll wait until a trend line breaks and the move becomes more authoritative, and then I will take another batch and then scale that out as it moves. So yeah, I scale in and scale out, but the most important thing is obviously to structure it around a risk-based scenario, so that you know your complete risk, and you're not constantly scaling in. You've got a vague idea of where you're going to scale in. You're not just scaling in blindly. Very quickly, I've only got 2 minutes left here. Do I trade any other markets? 50 Gov Trader. I answered that earlier on. Yeah, so I've answered that one. Are you bullish or bearish on the market long term? Uh, I don't care. I'm a short term trader. I don't read any of the stuff about where the market's going. I don't watch any CNBC. I don't look at. I look at the daily only for my day trading levels. I try not to get caught up in thinking about whether the market's going to go up or down long term. I trade every day based on what's happened recently. I'm a day trader, and that helps me keep an objective opinion. If the market suddenly shoots off into the distance, I'm looking to get on it as a trader. If I had a bearish overview of it and thought on the medium term, then perhaps it would hinder me looking to get on that short-term trade. Um, so I'm not bullish, I'm not bearish, I'm completely neutral. I don't look and I don't really care. I'm a short-term trader, and that's what I'm looking for. Anyway, we're running out about time here. If you've got any questions, you can email me. Email me let me just get my pen. You can email me, Mark at the Day Trading Room. It's Mark with a K at the daytradingroom.co.uk. Okay, email me your questions, and perhaps we'll do another one of these another time. Okay guys, I'll be back next week with another video. In the meantime, drop into the Day Trading Room forum, have a look around, and good trading.